Traders, Anthony here. Aussie dollar up here, buy or sell. Okay, obviously it's in a downtrend, and anyone would look at this on the weekly and go, well, look at that. Range is in here. Pull back into this distribution on the weekly time frame. Sell. That kind of makes sense. So we've got a fib retracer, high to low. Pull back into the 61.8. Bob's your uncle. Away we go. It's not as straightforward as this, unfortunately. There's a few things going on here that I'm a little concerned about. Yeah, this is a big level, without a doubt. And I mean, if it trades into here, we will get some sell opportunity, I'm sure, on the lower time frame. There's no worries about that. But let's just go out, have a look at this on the monthly. And this is the longer term, the higher time frame, the bigger picture. What we've got here on the monthly is a few things. Just grab that. This candle low would be a key level for me on the monthly time frame. So I call that resistance. So 1 month distribution, low of this candle. So a pull back into here would work for me, and then maybe short from here. Okay, so that's an idea for the monthly time frame. What do we got? Okay, we've got more targets over here. If it's bearish, lower highs, lower lows, well, we're going to be targeting, there's some lows over here, and there's some more lows here and even under here, right? So there's some targets we can consider. Monthly, that's fine. I like the look of that. We've got a 13, nearly 14 to 1 risk reward. Okay, so that would be the ultimate target on a monthly time frame, right? Now that's happened up here. I mean, if you'd entered up here, there's your trend. These things can go on for a while. Aussie dollar short, I like it. Strong dollar, yeah. Okay, so on that time frame, I'm good to go. That's a thing. Now, the story changes a little bit here on the lower time frame. Let's just have a look at, see these lows through here. Let's just call that liquidity pool. It's traded down into it, and it coincides with this back in here, this red candle accumulation range. Prior to this rally, we've got this accumulation. So this is a big support level, guys. Back here, in through here. You're going to be met with sell stops, basically. They drive it down into here, and that gets soaked up, and we're tapping into it again. So we're having two goes at it. Okay, the pressure is definitely bearish, so my bias is to short. But the question is, how far does this pull back? And if you set up a sell limit, does it get filled? Does this roll over here and we miss out? So that's the thing that you want to be considering. So the Aussie dollar. Righto. So let's, with that, go down to now the weekly time frame. And the monthly could take a month, 2 months. You know what I mean? Like for this to trade back up. So we've got time. On the weekly, and we'll keep this other pending sell idea here on the back burner. That's just in the background. What we've got here is this range. Big sell, strong range, building a huge amount of liquidity above and below this range. Now what happens here is we spike up into it, and that's fuel for a short, no problem. But look what we've got here, guys. There's a couple of things about this price action. We'll look at it on the daily that concerns me a little bit. One thing is, you can set up a sell limit up in here, but it may or may not fill. So if you want to get your feet wet, if we run with our normal trend continuation idea, then on the weekly time frame, we could go in with a fib retrace. We could go in here with a market sell, given that this has traded back in through our level. It's touched the 61.8. That's a valid entry point short right there on the weekly time frame, and that would coincide with the daily as well. So I don't mind that short here, weekly time frame, but you want to understand that looking at it from the monthly perspective, there's risk involved. So if we short this short position even at market, where you want to go with that? Well, gee, you know what? I mean, up in there would be okay. I'm thinking this is going to retrace high, but look, it's going to run into a bunch of resistance through here. So, up to you where you want to go. Let's just take it above these highs just to give it a bit of clearance, right? There's an idea on the weekly. And of course, well, let's just scrunch it up and go bananas with this. Honestly, look, that's my ultimate target down in here. Weekly time frame. There's my monthly idea. But understand that this could get taken out. Anyway, we'll look at this from a shorter term perspective. I'm okay to go in, market sell, Aussie dollar, but there's more to this than meets the eye. When we look at this on the daily time frame, it's going to indicate that there's a bit of a risk involved. So, look, you're building an argument for the trade, but there's pros and cons. how strong is the argument? I'm going to give this a 70%, 65, 70% probability and possibility it goes the other way and we get taken out. You want to look at it from that perspective. Then you want to manage your risk accordingly. So be careful. All right, weekly, trends down, pulls back, fib retrace, no problem, enter, stops above, good job. And the risk reward on that, what have we got? 9, nearly 10 to 1 risk reward. It's happy days. Now, what I'll be looking to do with all of these trades is I'm always looking to take 2/3 out. It's a wide stop and I don't like this target one. I would rather a narrower range with my stop, and I think there's more likelihood that target one, even down in here, something like that. So go above this red candle here, green candle, sorry, this green candle body high, something like that. All right, I'm good with that for a stop, and I'm going to be looking for T1 here. So let's just mark that up as T1. 1-to-1 risk reward, and understand that this could get taken out. So yeah, your risk management's got to kick in. So that's set up on the weekly, and we've got, look, if this fails and this gets taken out, then we'll come back to it whenever, if it's trading up in here, and we'll have a look at this as a possibility, this idea on the monthly. Now let's just have a look at it on the daily. Look, you're setting up monthly limit orders like this, you probably very rarely get a fill, so you want to be active in the markets. Here's the thing though, on the daily time frame, we've got, well, even above these highs, I'm okay with my stop up in here for now. And this target is realistic, okay? It's within this range, this daily range here. So that could be reached. I'm good with that. If this target is reached, then we pull our stop loss down above these highs. We're in the money, it's risk-free no matter what happens. Stop gets taken out, Bob's your uncle. So that's my take on this. Is a weekly / day trade sell. Now, here's the thing, look, see this double, triple bottom here? This has got me concerned, especially with this spike down. It's a potential reversal, potential, okay, not confirmed, but when you see the market set up these equal lows like this and then it spikes into it and rallies, be careful because, is this setting up for... is this setting up for the retrace on the monthly? So that's the risk, guys. Understand the risk. Now, again, look, this has got downward momentum. There's no problem here. You want to make the argument with the double top, double bottom idea. Well, what have we got? There's a bit of a spike up in here. Yeah, we've got this range through here. It spikes up. It trades down. It's questionable. It's really questionable. This could head in either direction at the moment, as far as I'm concerned. Oh yeah, look, so first of all, let's just cover the risk side of this. This is risky. This may work out. We don't know for sure, right? But you'll want to make sure that you never expose more than, and this is not financial advice, I trust that you're trading a demo account, right? Experienced traders, 2% exposure maximum. So you can work out how many trades you're going to allocate. So let's just say you're going to allocate a maximum of 10 trades at 0.2% per trade. That's position size, whatever the lots come into it, but that's your position size, 0.2%. On every single trade you take, then you are managing your risk and no more than, your 2%. So with that, I'm good to risk 2% here. That's the risk. See how we go. Okay, I think I'll wrap up the video here. Hope you've enjoyed the video and gained some benefit from it. If so, share the love and give me a thumbs up. Subscribe, hit the bell to be reminded whenever I upload a new video. With that, I hope you have a great day, safe trading, and we'll see you in the next one.